Today, the market panicked. It was a panic induced by tariffs. Clearly, this is what happened. Obviously, you can read headlines, things like that. But also, you can see it just in the way the stocks reacted. So, we saw a lot of smaller stocks, more speculative stocks, higher risk stocks just get absolutely crushed. TSM is not quite that. They're hurt particularly a lot because they're based in, believe it or not, Taiwan. So, they do a lot of importing into the United States. So, they feel particularly hard, near 7%. But generally, we can see this across the market. Some stocks held up really well. We're going to dive into that later. Some stocks got hit particularly hard. The smaller ones in your portfolio maybe are really high. Speculative tech, you got really crushed, and that's why it's really important to diversify out of that, because this is just a little bit of a glimpse of what would happen if there's a fall in recession. But like I said, specific stocks got hit harder than others. So if you have stocks that are very import-export reliant in the United States, maybe something like, I don't even check it, but I know cars. I don't have a lot of car stocks in my portfolio. I'm not a huge fan, but they do a lot of importing and exporting. So they might have been hit hard. I don't really know. There's also weird tariffs. There's always tariffs on vehicles. But anyways, Taiwan Semi. I'll give you a brief overview. So we saw this fall 6%. People are scared about tariffs. Some industries it's going to matter, some it's not going to. So I'm not going to sit here and say tariffs don't matter at all. However, for some companies, it might be a little bit more overblown. For example, something like TSM. What they do is so important. I'm a sucker for TSM. If you've seen this channel, you know I absolutely adore them. For them, in the short term, hear me, in the short term, and by short term I mean 3 to 4 years, it literally does not matter. What? How could you say it doesn't matter? What TSM does is so important that what is needed, what they provide, is going to be bottom no matter what. Now, you could see a slight dip, but even then, they're still valued roughly where you expect a company to be. They're actually under the S&P 500. So, if with the chips that are bought by NVIDIA, right? I would be way more worried about NVIDIA than them, because NVIDIA makes all their money from these high AI GPUs, right? All their AI GPUs. And TSM is going to pass that cost down the line, down the chain. So they're going to pass that cost on to NVIDIA. And assuming the Microsofts, Googles, Apples, Metas of the world still want to buy these chips, NVIDIA is therefore going to pass the cost on to them. So you actually may see, in the short term, the cost being put onto those guys more in the short term. Like I said, the long term, this could hurt TSM. It could force other competition to arise internally in the United States. It might be perfect storm for Intel, something like that. That's just on the impractical side of things. Whether these tariffs will be implemented, I'm not here to talk about that. I don't know. I'm not a political channel. I want to avoid that as much as possible while still diving into the issue. But TSM, like I said, if you're worried about TSM, people are going to stop buying what they do. Well, people aren't going to stop making smartphones. People aren't going to stop making computers. People stop making AI GPUs. You better see NVIDIA fall just as much, because they're the one that's actually going to get crushed. And honestly, I would assume that a lot of the demand is still there. It actually may hurt a company like I actually am fairly fond of, like an AMD, if they want to get into the AI GPU business. However, I believe AMD is still a solid company outside of that, and they're doing really well in the data center CPU market department sort of thing. So I'm not particularly worried about that too much. But anyways, I think that's what I want to cover with TSM, at least kind of the broad. Hopefully that gives you an overview about what I'm talking about with tariffs here, where it depends on the company. If your company is like iffy and they rely on a lot of imports anyways, I would be scared. But some companies it's going to matter a lot. Some it's not going to matter. And like I said, we don't even know how much tariffs going to be implemented at this point. Now, this was clearly an entire market-wide sell-off. Wow, shocker. You couldn't tell that by just scrolling through all those different stocks. But the point I'm making from that is it's different than the DeepSeek fiasco we saw a couple weeks ago, which I said, by the way, you can rewatch the tape. I did videos on it a couple weeks ago. I said it was noise, and turns out it was noise. All those stocks bounced right back up. You don't even think about it. That was like, what? That was... Remember when NVIDIA was falling 15%? TSM was falling 15%? It was just a blip on the radar. Of course, not everything is. And I'm going to be wrong, but that was just a blip on the radar. However, we saw a lot of value stocks rise because it was hit a specific sector. It was worry in the specific sector of semiconductors and AI chips and GPUs. That's where the worry was. This is a market-wide worry. Now, of course, specific companies are going to get hit harder than others, like Fabrinet. I covered that on this channel. That was like down 9%. You're going to see stocks in your portfolio that are down a lot, where the worry is concentrated, but you're still in an entire market-wide downturn. You're still going to see value stocks go down. You see this 2007. Everything was going down. When everyone's selling, when stock portfolios are getting liquidated, when 401ks are getting liquidated, everyone's selling. Everything's going down. However, a company like Avicii is going to perform better. It's probably going to maintain its share price relatively well. We saw this only fell just, 0.15%. That's nothing today. Of course, like I said, when everyone's truly liquidating 401ks, this is still going to be falling very fast. However, you're going to get that dividend yield as well. So people like the safety of something like Avicii. And of course, if the rates were incredibly high, that's a different story. Avicii is probably going to get hit fairly hard then. But you can diversify into stocks that are going to do better during a downturn. So we did see some downturn. Even Avicii, like I said, was down. However, specific stocks are going to get hit harder than others. This is a little bit of a glimpse. I said this during DeepSeek. You get a glimpse into what people truly think of the stocks. You get a look behind the film. When everyone's panicking, this is going down this much, this is going down that much, they view this as safer, they view this as better. That's just the reality. They feel this stock you own, they really think this is speculative, or they really think it's going to get hit hard during tariffs. You have to be able to differentiate the two. Usually something that's not as adjacent, but is a highly speculative tech stock, something like that, an unprofitable company. People like to sell out of those when the economy and the market's in rough shape for a number of reasons. But this is a good time to take a step back and reevaluate. Okay, am I fairly balanced? Do I have too much in tech? Do I have too much in high speculative tech? Do I have too much in value? You can make that decision too. So I like to take these opportunities to just take a step back and learn and reevaluate what I'm holding. Usually I don't do any too much, but it's more like, okay, I need to put more money here when I put money next into the market. Just some wrapping up thoughts on tariffs. What am I doing with my money? I like to ride things out. I'm not a big, I gotta sell here, I'm a long-term investor. So generally, I'm just gonna invest long-term. Even if I thought there was a good chance things were gonna keep going down, I'm gonna hold through. I don't own any specific stocks I think are gonna get absolutely wrecked by tariffs. I'm just not doing that. So I'm really not making any specific moves. I think there are certainly circumstances where I would be too afraid to hold a stock with some tariff threat, like something that imported a bunch, like everything in and out, in and out, in and out. You're gonna have things like that. But generally, if your company's important enough to, hopefully they're going to be able to pass that cost down the chain. And yeah, it might lead to a little bit lower profits, but at the end of the day, unless you think your money is better served in a rental property or in CDs or whatever it may be, you're still probably going to do better in stocks, even if gains would be lower because of tariffs. But like I said, generally, generally costs are going to be passed down the chain until it hits the consumer. That's generally how tariffs work, and I'm not making this as a political statement. That's just how the economics of stuff normally works. So I appreciate all of you for watching. If you enjoyed, like and subscribe to daily stock content on this channel. Try to keep you guys updated on my thoughts, whatever it may be. Appreciate you for watching. I'll catch you next time.